Have you ever wondered what the different asset classes in macroeconomics are? Well, you're in the right place. In the world of macroeconomics, asset classes form the foundation of financial markets. Join us as financial expert Mr. Hariharan breaks down the asset classes and uncover how they influence the economy, your portfolio, and beyond. Let's dive in.
Inflation, and we said that some bit of inflation is good, too much of inflation is not good. And what is the impact of too much of inflation on equity? Because the profits will get impacted on the debt. If you look at it, we said that if inflation goes up, interest rates will also go up, and if interest rates go up, which means essentially the yields will go up. And we did one session on debt, if you recollect, and we learned some concept that if interest rates go up, prices of debt securities fall, so they operate vice versa, right? Impact on currency: typically high inflation leads to depreciation of the currency. On the other hand, if inflation is low, it is positive because companies will be able to generate more profits. On the debt perspective, yields will fall, inverse relationships of prices will go up, so you can make capital appreciate. Similarly, on GDP, what will happen if the GDP growth is good, so on and so forth. So essentially, from an investment standpoint, as an investor standpoint, what do you do? Because we talked of these indicators, they will be published. So inflation will be published every month. GDP numbers will be published after the quarter is over, typically about 45 days after the quarter is over. So if you have an understanding of what is happening in the Indian economy, as an investor, you can make certain decisions. What are the decisions? I'm just giving it from a discussion perspective, not necessarily that you should initiate all of that. So if, for example, you find that the interest rates are expected to come down, which is what we have been saying. Now, RBI has also been saying that we will start cutting interest rates. So if interest rates are cut, the prices of debt securities will go up. We'll make capital gains, capital appreciation. By having a sense of what RBI is doing and the commentary from RBI, as an investor, you can take certain positional calls. We call them as tactical calls. So tactical call means if I feel that if interest rates are going to come down, I want to make some benefit. Can I get into some duration based debt mutual fund? I'm just giving you examples. I'm not trying to say that you should do that. I'm just trying to say all that we have learned or understood what is the impact at the end of the day from an investment perspective. Similarly, if I feel that interest rates are going to go up, it is not going to happen in India, at least in the foreseeable future. But if interest rates are going to go up, what kind of asset classes can I get into which can benefit? Similarly, if you find that the GDP of the country is constantly growing, inflation is also moderate, then what will be the impact on equity? What could be the impact on debt? Can I take some positional calls or tactical calls? Is one way of looking at whatever we have learned. Okay, but all of these requires a deeper understanding of timing in terms of when to enter, when to exit.
Thanks for your detailed answer. If you have any doubts regarding this or any other financial decision, don't hesitate to book an appointment with our financial experts. The link to the appointment is given in the description below. And also, would you like to know more about finance and investment? Then we would recommend you to attend our live webinar. The link to the webinar is also given in the description below. The webinar is absolutely free. If you like this video, hit like. If you are new to our channel, please do subscribe. Thanks for watching.